Mike here with RPQ. It's May 10th and it's time for Crypto Market Update. It's gotten ugly and it's time for me to get you up to speed here on what's going on, and I have quite a lot of material to cover here. I'm actually going to do these updates a little bit more often in the future, and I like to keep them short and sweet because I don't want to drag them out always for like 20-30 minutes, right? It's a bit exhausting and some of you guys might not have the time or the patience. This one in specifically, this may take a little bit longer because I have a few core concepts I need to explain here. A few things you see here play on this chart, which I've implemented actually many years ago. And then last year I lost them I couldn't access them because I upgraded to M1 on my OS X. And so my Parallels, which was Intel based, wasn't working, right? My Windows mount of Windows 10 wasn't working on the new M1. So I had to export everything out, and I never had time because I was super busy with everything that was going on with RPQ. And I finally did it, and I'm really happy. I'm really glad I did, because there's a few really good concepts, or a few really good things that I've completely missed, and that that actually are going to work very well for us. And there are three concepts at work here. Yeah, three. And let's start with the easy stuff first, okay? The blue arrows that you see are actually micro gaps, and they often point into the direction of the trend. Actually, they usually do. They start swapping when things flatten out a little bit, as you can see, but usually they transpire in the direction of the trend. It's kind of surprising to see micro gaps in the first place because it's a continuous chart, 24/7, right? Bitcoin USD, you know, it's only a 120-minute chart, and I was surprised how many we saw, and that was really surprising. And again, unless you actually use the stuff, it's sometimes with a pure eye, it's very hard to see, right? Because our eyes really don't pick these things up, and that's one of the reasons why I actually wrote these types of indicators. And again, it's not an indicator. This is like a phenomenon, right? I mean, price has jumped to that point. A moving average or stochastic or whatever, or MACD or RSI, all these things, they don't pick things like that up. But this is actually very valuable information, you know. Okay. By itself, the micro gap, has limited appeal. It's interesting up here to see that. That usually gives me kind of an early warning. See that? These micro gaps up here. By the way, red and green, they're actually breaches, and they're based on the Kalman lines that you see here. And I'm going to explain Kalmans in a second here. And in the future, we'll actually refer to this video on May 10th for people to kind of get an idea of these core concepts, right? Understand them and internalize them and understand how we use them and why they're valuable. Okay, so the second one is a netline concept. And the netline concept, you see these buy levels, right? Buy and sell levels, right? And let me zoom in a little bit here. Okay, it's going to be always a little bit of a delay because I actually do this on the VPS. And when I record, it's not exactly the fastest. Okay, here we go. So I just want to show how this works. The netline concept is deceptively simple. You take a series of lower lows, and they need to be three in a sequence, right? So if one low, then you pick a lower low, and you pick another lower low. So I mean, in essence, it's actually two lower lows, right, following one low. But they need to be lower. And what that does, on the first candle, on the high, it paints a line. The inverse concept is what you see at play here. So for instance, here we see a netline sell level. How does one produce? Well, very simple, just trace up where it starts. Okay, so it's this one, and also this one. It's not really apparent for some reason, but I think it actually, because these are double, I count these as one candle, if I remember the code correctly. So it's actually 1, 2, and then 3, right? So 1, 2, and 3. Oh, actually, pardon me, I was wrong. It's the highest that we're counting, not the lowest. So I'm on crack. Excuse me, 1, 2, 3 highs. So yeah, but I think I do actually in the code account for doubles. That because that happens sometimes on smaller time intervals, not so often on larger ones. But anyway, here we are. So again, this line here was produced by this low, by these highs here, and it basically paints the candle after the latest high on the low of that candle. See that? So it's 1, 2, 3. This might not be the most intuitive example. Let me find a better one that makes more sense. That it's easier to see with a pure plain eye. But it's these things are actually kind of hard to find actually. It's a simple concept, but hard to find when you kind of look for them manually. All right, so where is a clean example of that? Okay, so here's one. 1, 2, 3, right? 1, 2, 3. Higher highs, higher high, a higher high, and that means we draw the line here at the low. It's pretty simple, right? For this one, it's, the line goes here. These are the last 3, see? And those 3 here, so the line goes here. So it's basically creates these net lines, and it pins them on the next candle. And they're actually extremely valuable. When you zoom out, you see that. Because if you follow along here, right, and this is on the 120, it's actually quite a small interval for this concept. And we see that here's a net line sell level being breached. And then it just basically continues lower, lower, lower. Never makes it above the net lines, right? See here. Slices to another net line sell level. And then, again, doesn't even really get to the net line bear levels and continues lower, lower, lower. It's a very strong trend. And things get a bit more messy sometimes in the congestion zones, but that's actually the advantage of the net line concept. If things get really messy, it just doesn't draw any, and that's very valuable. Sometimes you get these fake outs here, and my internal rule is usually when I see a breach, I would, for instance, try to go short here, right? If it gets reversed and closed, next one, I close out. Also, if it gets reversed in the same candle, I close out again. So, and then you would try again, right? Which is basically either go long or stay in cash. But if you cannot trace it through, right? I've done this on so many time frames, and this works down to the 60. Excuse me, I get itch allergies. You see this concept here work, right? I mean, it works extremely well. It works extremely well, and it keeps you in the market, especially during the big trend phases. So that is basically the net line concept, and I've used it extensively. I actually have that indicator on Thinkorswim as well in TOS as a ThinkScript indicator. Oh my God, that was a pain to code. And so I've been using it for at least 10 years, and it's actually a concept I stole, plagiarized from a person called Chris Carolan. He's the author of the Spiral Calendar, and it has to do with kind of moon cycles and things like that. It's really exotic stuff that I kind of was interested in way in the days. It sounded like a good idea. Don't laugh, we've all been through it, Dave, right? But basically, this is one concept I stole from him that I thought had really merit because it's just purely price-based, right? So anyway, so that's the second concept, right? Net line sell level and net line buy levels, or net lines. And I use them quite effectively, and we'll see how valuable they are, and I'll get to that in a second. So the other concept here, these lines here, those are actually not moving averages, and you can see how well they actually track, and you'd be surprised to hear that this is actually a 21, this is actually this is a 21, pardon me, and this is a 50. So the Kalman is actually a concept that is used in navigation, temperature sensors, dynamic systems, which it's used everywhere. It's probably used dozens or potentially hundreds of times on your mobile phone. And let me, if I can here, let me move that window up. I've prepared a little bit of an explanation. And the Kalman is extremely good at using a data set, right? For instance, here's a good example. This is actually from a series that I watched, I think 40 YouTube videos. Watched this a few years ago. And it's basically, it's an iterative mathematical process to quickly estimate the true value, precision, velocity, for instance, like in navigation systems, or potential like satellite systems, or just an airplane, right? Positional systems, temperature, all kinds of things, right? Doesn't matter what it is. All these types of system where you have a calculated value based on your projection of something, of X, and also a measured value. And what the Kalman is really good at, it's an iterative process, right, is to take very few measurements, and you can see here, right, and this is, for instance, a good example of maybe a really, really badly calibrated temperature gauge, right, or thermometer. And you can see that really quickly, right? Initial estimates, it gets really close to the actual temperature, right? Really close, but just like, you know, like if you see the swings, right, boom, and it just hones in very, very quickly. And that's the advantage. It traces it very well, and it's a really superior method. And it's been used for decades, by the way. It's nothing new. This is an old... Oh, I just lost my connection, so I hope I'm still recording. It's trying to reconnect. Give me a second. I'm going to put it on pause and wait it out. Okay, we're back. So, not sure where I was, but again, it's a really old concept. Been used for decades. Nothing new. Look it up if you're interested. If you're a math nerd like me, you know, there's a really cool video series from what is it called? Electro something online. You'll find it. You'll find it. It's like a video course. You'll find it when you just go on YouTube. It's extremely interesting. If you're a math nerd, it's a must watch. So anyway, it's a concept that I then integrated here in NinjaTrader, which is a C# based development, API. But it's a charting software as well, but it also allows you to implement indicators and systems and strategies and all that kind of stuff. And I actually implemented the Kalman filter in code, and that's what I'm using here. And it actually, you can see how it traces price extremely well in terms of the direction. See that? Right. I've actually used two here, and I'm still experimenting around a little bit. I actually originally had the Kalman at set to 21. And then I had actually a moving average, EMA actually, an exponential moving average set to like, I think 14 only. And it was working pretty well too, but then I had the idea to use a Kalman at 50, and I think it was actually 100. Let me check here real quick, actually. Let me pop it up. What the actual measures are. Give me a second. I need to put this over. Let me move my head over here. There you go. All right. Indicators. Okay, Kalman set to, this is the 50, and that's the 20. Okay, so it's a 20 and a 50, right? And you can see how closely they trace. It's extremely interesting. I mean, imagine a 50 EMA on this. It would just be way off, right? And so, but you still see slightly of a difference. And I think it's even good enough on this 120 minute chart, right? And you see, I mean, how it really keeps you in the trend. I mean, it's just almost uncanny. So, you know, if you want to see a little bit more here doing congestion zones, I think it keeps a really cool profile. So it helps us lead down. Here's a crossover, right? The crossover is okay. Boom. There's a little bit of fake up, but then you get back in. Here's actually a net line buy level that was breached. You would get out here though, and then you would probably recover and get back in if you put up, go on top. Here's another buy level. It gets messy to a table like this. Obviously, there's no system or indicator in the world that gets you through this clean, but I think this is as clean as they come, right? And what's importantly, it gets you back in here, right? So, and then it leads you back higher, and here it gets you, there's a net line sell somewhere here. This might actually be the exception, this case here, where, oh yeah, there's a net line sell, yeah, right there, which it napped. Yeah, I had it set to a little bit longer, this one here. Because I thought it was important, you know, for a quicker time frame. This is set to, I think, 7 days, if I'm not mistaken. Expires in 7 days. Let's see. I'm not sure. I have to look at indicators. Sorry. Okay. Indicators, net lines. Yeah, 10 days actually. I've set it to 10 days on this one. So 10 days the net line expires, right? Anyway, and then see how it traces down. I mean, it's just beautiful, the trend. And that brings me to today. Where are we? So, by the way, this is the concept that I wanted to kind of explain in a little bit more detail. I did explain in my Elite Mastermind update on the weekend, but most of you guys don't have access to that, so I thought I would explain it again. So, where are we? Well, as you can see, we're seeing a little bit of an attempt to paint a floor here. And but it's worrisome, and I hate to be the constant bearer of bad news, because I have been for a while now, and fortunately I've been right. Apologize. Again, this looks negative, because as you can see, we have a very clear net line buy level here. Again, I've set it to 10, not 10 days, 10 candles, which means in this case 2 hours, right? So it's basically 20 hours. I should probably set it to 12 hours, to 12 then, that makes it a whole day, right? That would make sense maybe. But anyway, so whatever, this shows me here that there is again right here at the buy level. See that it gets rejected. And we see this all the time, and this is crucial. See, it gets pushed down, tries again, closes below. If you would go long here at this trigger, it would actually. That's my personal rule. If it closes below, I would go out again. I would exit or stay in cash. Here would same thing. Just get in here, and if it closes out, it would stay exit in cash. Same here, right? So sometimes you get jerked around a little bit with this concept. This is actually quite rare, but just from looking at it, right, you see that it's trying, right? It's trying to overcome this, but it keeps failing. What worries me now is actually that here's a net line sell level now. See that, right? So again, remember concept one. What's that? 1, 2, 3. See 1, 2, 3. Higher highs. So that paints the low here at this candle, the first one, right? Which happened to be identical. That's why I got confused last time. So you see that line here, and we're getting pretty close. My understanding is that if it breaches through this again, which is right now at, maybe it's tiny, sorry, 30,000. God, what is that? It's so tiny in the small screen. Don't see it. Well, let's just, this is 30,500, so it's probably 30,600 something. If it breaches through that, we might actually go lower. So I hope this doesn't happen. So we're kind of in the box here right now, right? And I see again, these breaches back below from these arrows here mean that it basically closed below the Kelvin. Same here, it closed again below the Kelvin. Well, actually, it's not done yet. This one, so I have set this one to live. So ignore this one for now. Actually, I have to set this to closed candle. But it's a mess right now, and it's trying to work its way out. The first inflection point, which you might be interested in, is here, 31,923 and change. So that's the buy level. That would be the first one. The second one we have here ahead is 32,645. Okay, so this one right here, if it gets breached, then we have a chance to actually work our way higher. Right now, it doesn't look like it yet. It looks still, it's fighting. It's still trying to find a floor. Okay, so that's that for the current update. So if you're happy with that or unhappy, either way, you can switch away now. I'm gonna just go through here a little bit more and show you a few more occurrences. Also gonna show you the daily. The daily is also interesting. So let me go to a day chart and I'll show you a little bit more context. Okay, I thought would be happening. 1 second. Again, everything's a little bit delayed. There. All right, so that's basically the price action in all its glory. And again, the concept works extremely well. Here on the daily, we have, actually the next buy level is pretty high. It's like 36,660 or something like that. So that's basically this buy level here. That's the next one. We will, if we finish this candle, actually most likely we're actually going to paint one here as well. This high, see 1, 2, 3. So that would be at... oh God, it's so tiny. 35,499. Yeah, and that's basically where the next one is going to be painted. Yeah, the next buy level right here. Once this candle concludes here, actually this is the daily one. So, and if you're looking at this whole, if you follow down this trend, we have the sell signal right here. See, also it flips, the Kalman flips, which is also another sign for us to go short, and it just basically keeps us in the game here all the way down, which is why I really like this concept, as you can tell. So again, we have buy levels are miles away at this point. The next one is going to be here, still miles away. Let me show a little bit more context here on the way up. So here we had a net line buy level actually. That was breached. Very nice. Here actually already. Then we closed below. So we went out. Then we again breached it. So we went back in. And here we actually stay in the game. This is just a warning that we breached below one of them. but we continue higher, breach another buy level, continue higher, micro gaps high, everything looks good. That's where things get a little bit squirrely, right? We're seeing actually micro gaps down. That's the first indication of problem. Then we kind of flip back and forth here, and eventually we resolve down. If you want to see more context, let me scroll a little bit more. So it's just my lens, right, so to say, of how I look at the markets. And I have been looking at the markets actually for a long time, and it's always worked very well for me. Again, sell signal here. Even if whippy tip like this, you would get in here, and you would probably be out here, go long again here, right? So, you gain much, no, but that's really the purpose here is not to get killed, right, in these swings, right? Same here. Right, where you buy here, and here's where you sell. If you're not already short, here's where you sell. Right, it's never able to overcome these buy levels. The trend is very clear, so you can see how really powerful this concept is, even on a daily chart, right? Especially on a daily chart. Right? So here again, you can see when these two are starting to cling together, we know we have congestion going on. And that's very valuable as well, right? And so it's probably a good time to stay out of the market until you get a clear signal. And then, here you get a breach to the buy level. Maybe you wait one candle or so, opens up here, work its way higher. Even if you miss this one, it's really not that big of a deal. Here's another sell signal, which is serious because it actually closes. It slices through two net lines, right? If you're not catching this one, you want to be short at this one. And and at this point, you're basically in the trend, right? And you work your way down. So, I could do this all day. I'm telling you, this is not really anything, spectacular or I don't pick tape. I didn't look at tape before I filmed this, in terms of like trying to convince you of this concept or anything like this. This is a concept that is pretty well established. And which I've been using for a long time. Again, see, what I really like particularly well here is, this looks pretty messy, right? All this here. But see how the Kalman keeps in the game all the way. Here it gets a little bit close, right? Where it kind of crosses over briefly, but comes right back. But it keeps in the game. And one of my lights does that. Sorry, why? Hold on. Oh, yeah, here it's back. I think I have to buy a new power unit or something. It keeps in the game. It keeps you really in the game when it matters, right? That's what I like about this concept. It's a great concept. It's far, far superior to moving averages, which have a tendency to constantly cross. That might keep you in this one, but they will get you out here. And this is where it's when the trend is kind of just slowing down a little bit. It keeps you in the game, and that's very, very important. Even when you might have a netline sell level, but to get back in here, right? If it gets reversed, which is my rule as well. If a netline sell gets reversed, boom, I'm back in. And I can follow up. So it's really a great way of looking at the market, and that's something I want to keep employing moving forward. Showing you do regular updates, showing you where we are on different time frames, right? We can even look at the 60-minute. It's going to get a little bit more busy. It's usually not an interval I'm really very too keen about. See, it still holds up, which is really crazy given it's only a 60-minute chart. Here on the 60-minute, we already have a sell signal, so that's negative, right? If you follow the 60, we had a buy signal, get reversed, not good. Now we have a sell signal. It's closing. If it closes below here today, the 60-minute, sorry, then it's another confirmation. So that's not good. 120-minute, 120-minute. You've seen that lens, so that's where we got a little bit more space here to go. I think we're okay for now, but if we're breaching through this, we're kind of in trouble. So that's it. Just looking at Bitcoin on this chart, I think it's a very valuable concept that you guys might enjoy, and I think I'm going to just keep looking at that together with you. Maybe gather some input from you guys as well, and see what you think. And if you feel that it has merit, I could very easily actually build a system around it. A very slow, maybe a daily system where we just keep in the trend. It might actually be insanely valuable for us doing Bitcoin and Ethereum season. And that was actually something that kind of occurred to me the other day, Because right now we're just in Bitcoin, Ethereum, trying to kind of weather our things. And the last few weeks it's been tough for us, right? I mean, we've been really squeezed, and it would be nice to be able to say, okay, here's a good, if we're in downtrend, we can at least maybe reduce position sizing or something like that, right? Maybe stay a little bit in Bitcoin or stay a little bit in Ethereum. But if things are generally trending down, well, we might want to scale back a little bit. And I think that might be a valuable approach. I usually don't jump to conclusions and just jump on some kind of idea, haphazardly. That's not really the hallmark of a professional trader. You look at stuff, you make it work, you trade it forward, and if it shows merit, then maybe you can spend some time coding it. Because I've been on that rabbit hole where I've been spending months of coding with some idea, and then I figured out it has no merit at all. The best thing is to really just do it, establish some very clear rules that everyone agrees upon, right? And I do have some rules that that I've explained already, which I think make a lot of sense, based on my own way I've been trading it. I think I'm missing some data here. 1 second. And maybe you guys will enjoy that. A little bit more days here, 30 days. 30 days there. Okay. So now that's it. That's the micro gap, net line concept, and also the Kalman filter. That's what I got today. I hope you enjoyed it, and I'll see you guys next time. Cheers.